Hello traders, welcome to the video. Today, we will delve straight into discussing our trading strategy. To visually illustrate the strategy, we will utilize the Tradingview platform. For the purpose of demonstration, we will employ the 15-minute time frame of Bitcoin chart. However, keep in mind that you can apply this strategy to various other charts and time frames. Now, let's add the first indicator to our chart. To do that, click on the Indicators search option. Then search Twin Range Filter and add this indicator to our charts. Once the indicator is added, you'll notice it's a simple buy-sell indicator. However, we need to modify it slightly. To do so, open the settings of the Twin Range Filter indicator. In the Input tab, make sure the source option is set to close. Then change the Fast Period option to 45 and the Fast Range option to 2. Set the Slow Period to 145 and finally change the Slow Range option to 3. After optimizing the Twin Range Filter indicator, you can enter a long trade whenever it gives a long signal, as shown in this example. Similarly, when the indicator indicates a short signal, you can enter a short trade. As demonstrated here, the indicator signals appear to be quite reliable. However, there is still potential to further increase its win rate. In order to do that, I'm going to use two other indicators for this strategy. So I open the Indicators tab of Tradingview again and this time search Mean Reversion Channel, and I click on this indicator to apply it to my chart. Just look at how beautiful this is. However, the beauty of this indicator isn't in its physical appearance. It's actually in its ability to identify overbought and oversold levels in the market. The mean reversion channel is a tool developed on the principle of the mean reversion theory, which stipulates that price tends to return to its average over time. This tool is designed to provide you with a visual guide to identifying certain critical areas in the price chart as follows. The inner channel is represented by dotted lines and indicates dynamic support and resistance levels. These lines serve as critical areas in the price chart. On the other hand, the outer channel consists of beautifully colored bands. Its purpose is to identify overbought and oversold conditions in the market. In the middle, we have the mean reversion line, which helps identify fair price levels. The theory suggests that whenever the price deviates from this line, it will strive to return to it, hence the term reversing to the mean. To customize the indicator, double-click on it to access the Settings option. In the Inputs tab, you can change the outer channel size multiplier to 1.5 and disable the line extension option. On the Style tab, you can choose to disable all options except for the plot background, which can be left enabled. Now, let's discuss a typical trading approach using this indicator in a bullish trend. For instance, when the price approaches or touches the upper channel, it indicates an overbought market condition. The market will remain above the mean line and generate signals, then we will execute the trade. But a lot of buy and sell orders are being generated in the market. Do not understand properly on which signal should we execute the trade. For this, we will add one more indicator which will tell us the trend of the market. But before we add them to the chart, what broker do you guys use to trade? Personally, I use IC Market. Because of their extremely low commissions and zero spreads on Forex. For example, the spreads can go as low as 0.0 pips, which is the lowest it can go. And for those of you who love high leverage, guess what? IC Market offers up to 1000x leverage. Sign up to IC Market using the link in the video description. Back to the video. By modifying the indicators, we can further enhance its win rate. To achieve this, I'll be incorporating additional indicators into our strategy. Let's navigate to the Indicators tab on Tradingview once again. This time, we'll search for G-channel trend detection and apply it to our chart. The purpose of this indicator is to assist us in identifying the short-term trend of the market. However, we have the opportunity to enhance its visual representation. To accomplish this, let's access the G-trend settings and proceed to the Style tab. Enhance the visibility of the G-trend indicator. Let's adjust the opacity of color 0 to 100% and also set the opacity of color 1 to 100%. Additionally, we can increase the thickness of both color options to make them more prominent on the chart. Now, we can close the G-Trend Indicator tab. The G-trend indicator proves to be highly valuable in detecting fake signals. Here's how we utilize this indicator. Whenever the market trend is ascending, indicated by the price being above the G-trend indicator and the G-trend graph appearing green, we focus on entering long trades while avoiding short trades. Let's take an example of a long signal that occurred here. The trend is ascending as the price is above the G-trend indicator and the G-trend graph is green. This signal presents an opportunity to enter and generate a remarkable 3% profit in this particular time frame. Such gains are indeed significant for a single trade in the spot mode. Before proceeding, it's important to highlight the significance of the G-trend indicator and filtering out fake signals. Let's take a closer look at a recent signal. Although it initially appears to be a short signal, the upward momentum indicates that it may not be reliable. This is because the price is above the G-trend indicator, indicating an upward trend. In such situations, it's crucial not to enter a trade based solely on this signal, as it would be considered a fake signal. The G-trend indicator acts as a valuable filter in helping us identify and avoid such signals. On the other hand, the opposite scenario holds true for short trades. We consider entering a short trade only when we are in a descending trend. This entails the price being below the moving average graph of G-trend, and the color of the moving average itself being red. These criteria ensure that we are trading in alignment with a downward trend, increasing the reliability of our signals. Now, let's explore how we can utilize all three indicators together. Take a look at the chart where a buy signal has been generated. The first condition for entering a trade is met. The second condition requires the buy signal to occur above the middle line of the MRC indicator. In addition, the price should be above the G-trend indicator, indicating an upward trend. Now that all conditions are fulfilled, it's time to execute the trade at this point. To manage risk, set the stop loss at the previous swing low. Remember to monitor the market closely and book profits when the next sell signal is generated. By incorporating these three indicators and considering specific conditions, we can improve our trading decisions and increase the likelihood of successful trades. Remember to adapt this strategy according to your risk tolerance and always stay informed about market conditions. Afterward, observe the chart where a sell signal has emerged. The first condition for executing a trade has been satisfied. Furthermore, the second condition necessitates the sell signal occurring below the middle line of the MRC indicator. Additionally, the market price should be below the G-trend indicator, signifying a downward trend. With all the conditions fulfilled, it's time to execute the trade at this point. To manage risk, set the stop loss at the previous swing high. Monitor the market closely and aim to book profits when the next buy signal occurs. Furthermore, as the market progresses, another sell signal is generated. We execute the trade based on the new sell signal. However, it's important to note that not all trades will result in profit. In this particular instance, the market turns against us, resulting in a small loss. To minimize potential losses and manage risk, it's essential to exit the trade promptly when the buy signal emerges. Once again, we come across a sell signal on the chart. This time, the conditions for executing the trade are met. The sell signal is below the middle line of the MRC indicator and the market price is below the G-trend indicator, confirming a downward trek. With all the conditions fulfilled, we proceed to execute the trade and set the stop loss at the previous swing high. Our profit target is set for the next buy signal. It's important to note that trading involves a mix of profitable and losing trades. In this case, we experienced a small loss earlier followed by a significant profit. This pattern is common in the market where a few big wins can outweigh the impact of smaller losses. By sticking to our strategy, managing risk with stop losses and consistently evaluating market signals, we can increase our chances of overall profitability. Remember that trading outcomes can vary and it's crucial to develop a disciplined approach, adapt to market conditions and continue to refine your strategy over time. Now I'm going to test this strategy on the GBP/USD currency pair. I will take 100 trades and I will calculate the accuracy and gain of this strategy. Okay, the results are in. After 31 days, the test is truly amazing. So let's check it out. Now, I used a 5-minute time frame. This was done using a 1:1 and 1:2 risks to reward ratio on GBP/JPY. And it took 1 month of price data to find the 100 trade signals, which is actually very good. There were 72 winners and 28 losses. The win rate is 72%. This is a really good win rate. The most won in a row was 5 and the most lost in a row is 2. The gain on the account was 1,600%, and that's risking 2% per trade. That means if you had a $1,000 account, you can gain at least $1,600 profit using only one currency pair. The good thing about this strategy is that you only have to risk 2% on each trade. It is still very profitable if you put in 20 trades. At least 13 trades will be profitable. Don't risk more than 2% per trade. You can use more than one currency pair and you can gain more money with this strategy. If you want more such important strategy, then subscribe the YouTube channel and turn on notification bell icon to get new updates as possible as soon. Happy trading, thanks for watching our video.